Hello, and welcome back to the channel. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're examining a pure price action system called the Pivot Engulfing Scalper. It uses no traditional indicators at all, no moving averages, no oscillators, just market structure, the engulfing candle pattern, and pivot levels. By the end of this video, you'll understand how it identifies a structural breakout, how it manages a failed break with a hedge, and how its money-based basket exit works. This is educational information only, so let's get into it. So what exactly does the Pivot Engulfing Scalper do? At its heart, this is a short-term, price action strategy built around a single idea, trading the moment a key structural level breaks. Every time a new bar closes, the strategy looks back over a window of recent candles, 20 by default, set by the PivotLookback parameter, and measures the highest high and the lowest low in that window. Those 2 points are the swing high and swing low, the levels the broader intraday crowd is watching. From them, it also calculates a classic pivot point, which is the average of the high, the low, and the most recent close, along with the first resistance and support projections above and below. Now, instead of betting that those levels will hold, this strategy does the opposite. It looks for them to break. The signal that confirms a genuine break is the engulfing candle, one of the most widely taught patterns in price action. When an engulfing candle closes cleanly through the swing high or the swing low, the strategy reads that as a shift in momentum and opens a short-term scalp in the direction of the break. Because it relies only on price structure and candle patterns, there's no indicator lag and nothing to hardcode per symbol. Every distance is measured as a fraction of the range, so the same logic adapts across instruments and time frames. It's designed for liquid, momentum-prone markets like the major foreign exchange pairs, such as euro, dollar and pound, dollar, or gold, on intraday charts like the 5, 15, or 30-minute. This kind of system will naturally appeal to traders who are curious about market structure and pattern-based automation rather than indicator-heavy setups. As always, this is educational information only, not financial advice, and trading carries real risk. Losses are a normal part of any strategy. Let's walk through the mechanics step by step. The strategy only hunts for a new setup when it's completely flat, with no open positions. On each freshly closed bar, it recomputes the swing high, the swing low, the central pivot, and the range, which is simply the high minus the low. Every buffer in the system is measured as a fraction of that range, so nothing is tied to a fixed pip value. For a long entry, 3 conditions must line up. First, the candle that just closed must be a bullish engulfing pattern. The prior bar was bearish, this bar is bullish, and its body completely engulfs and outsizes the previous body. Second, that candle must open at or below the swing high and close above it, a real break of structure. Third, it must not be overextended. The close has to stay within the max extend fraction of the range above the level, keeping this a fresh scalp rather than a chase. When all 3 align, the strategy opens a buy and sets its take profit at the first resistance pivot, R1. The short side is the exact mirror. A bearish engulfing candle must open at or above the swing low and close below it, while staying within the extension limit. That opens a sell, with the take profit set at the first support pivot, S1. The stop loss is placed structurally, a pad beyond a special level called the fail trigger, and this is where the signature mechanic comes in. If price travels back through the broken level by the fail fraction of the range, the break is treated as false. Rather than simply absorbing that loss, the strategy opens an opposite leg, a hedge, that aims back toward the central pivot, offsetting the original position while price snaps back. Finally, exits are governed by a money basket. The instant net floating profit across all open legs reaches the basket take profit amount. Everything is closed. If net floating loss reaches the basket stop amount, the whole basket is flattened. That basket rule, rather than the individual stops, is usually what ends the trade. It's a deliberate design choice. The strategy manages the combined position by money, not by a single ticket. Here's the core of that logic as it appears in MetaEditor. At the top are the input parameters you can adjust in the strategy tester. PivotLookback sets how many closed bars define the levels. Max extend fraction, fail fraction, stop fraction, reward fraction, and reclaim fraction all shape the buffers as fractions of the range. BasketTpMoney and BasketSlMoney define the account currency exit levels, and there's a maximum spread filter, the lot size, and a magic number to tag the trades. Below that is the long signal block. The Boolean named Bull Engulf checks 4 things in one line. This candle closed above its open. The prior candle closed below its open. This body engulfs the prior body, and this body is the larger of the two. The broke high check confirms the candle opened at or below the swing high and closed above it, and fresh up confirms the close isn't overextended. When all of those are true, the strategy calls trade.buy, with the take profit set to R1, the upper pivot projection. The short block is the precise mirror. Bear engulf confirms a bearish engulfing candle. Broke low confirms it opened at or above the swing low and closed below it, and fresh down checks the extension. That calls trade.sell, with the take profit set to S1, the lower pivot projection. In both cases, the stop loss, passed as norm of SL, is placed structurally beyond the level where the hedge would engage. Notice both sides are symmetric, the same rules, in opposite directions. Now let's bring it to life on the chart. What you're seeing is an illustrative euro-dollar sequence that walks through one long trade and then one short trade, exactly the way this strategy would read them. Remember, there's no oscillator panel here, because this is pure price action. The only reference lines drawn are the structural pivot levels themselves. Look at the opening candles on the left. Price is drifting lower in a small pullback, and the strategy is quietly measuring the highest high of its look-back window. That high becomes the line marked prior swing high at 1.0866, the level the whole market can see, and the level this strategy wants to watch for a break. Watch the next few bars. We get a small bearish candle, and then a strong bullish candle forms right behind it. This is the setup the strategy is waiting for. That bullish candle opens below the swing high, then closes decisively above it, and its body completely engulfs the prior bar. A textbook bullish engulfing break of structure. All 3 conditions are satisfied at once, so the buy entry marker prints right there. Notice the strategy didn't predict the break ahead of time. It waited for the candle to close through the level and confirm it. From there, follow the momentum. With orders above the old high being filled, price extends upward over the next couple of candles. The target was set the moment the trade opened. The first resistance pivot, R1, drawn here at 1.0888. Price climbs into that level, and the take profit marker fires. That's the long scalp complete. A confirmed break, a move toward the next pivot projection, and an exit at the target. Now the character of the chart changes, and we set up the mirror image on the short side. After the push higher, price stalls and rolls over. The strategy is once again measuring structure, this time the lowest low of its recent window, drawn as the line marked prior swing low at 1.0873. That's the floor it now wants to see give way. Watch the bounce just before the break. We get a small bullish candle, and then a large bearish candle forms and overwhelms it. That bearish candle opens above the swing low and closes below it, with its body fully engulfing the prior bar. A bearish engulfing break to the downside. The conditions mirror the long side exactly, so the sell entry marker prints as that candle closes. Follow it down. As the floor breaks, downside momentum carries price lower, and the strategy's target was already defined. The first support pivot, S1, drawn at 1.0856. Price slides into that level, and the take profit marker fires, completing the short scalp. Now, the chart you're watching shows 2 clean trades that reach their targets, but it's important to be honest about the other path. Sometimes a break is false. Price pokes through the level, the entry fires, and then price snaps right back. This strategy plans for that. If price retraces back through the broken level by the fail fraction of the range, a quarter of it by default, the break is judged false, and instead of simply taking the loss, the strategy opens an opposite hedge leg aimed back toward the central pivot. From that point, the net result of both legs is managed by the money basket. When the combined floating profit reaches the basket take profit, everything closes. If the combined loss reaches the basket stop, the whole basket is flattened. So as you watch these markers, keep the full picture in mind. The reward distance on each scalp is shaped by the reward fraction, defaulting to 0.6 of the range, and the structural levels, the swing high, the swing low, R1, and S1, are recomputed on every single bar. Clean trades like these do happen, and so do false breaks. That's exactly why the hedge and the basket exit exist. That brings us to the end of our breakdown of the Pivot Engulfing Scalper. We covered how it measures swing highs, swing lows, and pivot projections on every closed bar, how a confirmed engulfing candle signals a structural break, how the long and short entries mirror each other, and how the hedge and money basket manage the trade once it's live. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Automated strategies can and do experience losing trades, so always test thoroughly on a demo account and never risk money you can't afford to lose. If you found this useful, please like the video, leave a comment, and subscribe for more MetaTrader 5 strategy breakdowns. You'll find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.